Happy Monday, traders. It is the 21st of March, 2016. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall sentiment overnight with oil up slightly, gold being down, the Treasury bond futures are down, the 10s are down, the Eurozone Bund is flat, the Nikkei down, Hang Seng flat, Shanghai up, Japanese yen futures flat, and the Eurozone equities with the DAX being down, the FTSE slightly down, the CAC 40 down, and U.S. equities, namely the S&P 500, slightly down, and the U.S. dollar slightly up. So you heard a lot of downs there. Overall, the overnight sentiment stance is mixed to risk off, with crude oil being the only major product that is up, and it's losing some of its traction. Crude gapping up. The only real news that I see is a warning by the People's Bank of China overnight, stating that corporate lending as a share of GDP is far too high. Corporate debt load is around 160 times GDP and growing. They have a lot of concerns. Also, it is Twitter's 10th anniversary. Looking at the week ahead, given that it's a Monday, tomorrow we're looking for, let's look at today. Today's calendar shows that the key release this morning will be existing home sales at 9 Central, 10 Eastern. Expecting 5.32 million for existing home sales. Other than that, we're expecting Fed's Lockhart to speak on the economy in Savannah, Georgia at 11:40 Central, 12:40 Eastern. And other than that, it is business as usual. For the week tomorrow, for those who trade the European session, the IFO business survey as well as the Zoo survey are coming out tomorrow. UK CPI, PPI, RPI, and then during U.S. hours, we're looking for housing prices. ECB's Villeroy, Fed's Evan, and Harker are speaking. Wednesday, new home sales, ECB's Weidemann. Thursday, German, European manufacturing PMI and services, UK retail sales, and then in the US on Thursday we get US durable goods, manufacturing PMI, and then we get ECB's bulletin and Fed's Bullard. On Friday, it is Good Friday. The exchanges are expected to be on a reduced session. However, we're still getting U.S. core PCE GDP annualized. Again, Friday is a reduced session. So expect the market to be fairly quiet that day, and that's how things are shaping up for the week. Let's look at how they shaped up for last Friday. Here's our review of what was expected on Friday. This is from Friday's Trader Bites. So the key element here is that when the Trader Bite was going on, the market was trading in the 2033-34 area. It ended up actually drifting up. If you may have noticed last week that the last 5 minutes before the cash open at 8:25 Central, 9:25 Eastern, the market has had a tendency to drift up before the open, and we saw that again on Monday. Monday ended up opening right on the edge of Thursday's high. The expectation is for a balanced session, but overall breaking higher. The over underline, and I cannot emphasize this level enough, just like with the 2015 below, but right now 2026 is really important. This is an area or a price zone that you really want to mark. 2026 even. I'll show you why in a second. So that's the primary hypothesis. A fairly choppy morning, and then it resolves itself upwards. And then the hypothesis number 2, the second most likely idea for the day, trade idea for the day, was a drift up, take out the overnight high, the prior day's high, to resolve this energy up here, and then start moving downwards to that 2026 or through it. Clearly, the second hypothesis did not work out. Let's look at how things played out. Here it is. This is Friday's 15-minute. Let's bring it back. So what we had is a couple bars of chop, and then it immediately went and caught fire and pushed up to 2042.75. We're expecting 2040 as the test area. 2040 ended up being the point of control on Friday. A very tight, in my opinion, pretty tight trade. Very, very balanced, completely Gaussian profile with a lot of bulk in the middle. Clearly, the high and the value high and so on and in this are very valid. You can see that the value high is just 2 ticks above the point of control. Value low at 2036.50. The overall range is from 42 down to 33. We have not seen that in quite some time. It's approximately 9 points of range. So overall, pretty tight session, pretty quiet session on Friday. But what we need to take out of this is that we did break the energy that was stored Thursday to the upside. We did shift our point of control up. We are in a very high volume area, very difficult area here on the microcomposite, and the expectation for today is that we start to we're likely to open in range in value. I expect it to pop up. I'm looking for 2040, but I'm looking for sellers to kick in and for this to start moving down to the 2026. In fact, the 2026 will be right around there. This would be hypo 1. That's the primary hypo for today. I'm expecting a bit of a reversal today. One thing you might want to observe here is the double top here at 41.75. It's a local double top on what appears to be a forming inverted head and shoulders formation. If this starts to break higher, assuming the 2033 stays intact, if this starts to break higher, then this would be the neckline of the inverted head and shoulders. The target is 2050 if you project this neckline up. The target for this is 2050 if it decides to go up. So on hypo 2, if we do break higher, we start to look for 2050 as the next key area to test. Okay, but the main idea for today is that it's likely to get tangled up in Friday's profile, completely balanced, neutral profile, neutral normal, and it's looking a little heavy on the overnight, and the expectation is it's likely to break lower today, with 2026 being the key price to test below. Let's look at the overnight. The overnight, as you can see here, pretty tough, pretty tough trade. A drift down on the Asian Open, and then just completely dead for several hours until the European Open. The European Open brings in buyers, and then the buyers show a very clear corrective pattern down. This rally was completely negated. This rally at about 4 o'clock in the morning, 4 to 5 o'clock Central U.S. time. We're trading right now in the area of the point of control. Very boxy profile. There's no real consensus. We don't see the market finding consensus on price at all. The market seems to be fighting on both sides and exploring prices all the way up, with the overnight value high at 2039.50, just below the 2040. The market clearly could not stay up in the overnight session, could not stay up above Friday's high, and has rotated down again. This is a corrective pattern, what's called an ABC pattern. Not that I'm a pattern trader, with a oops, can't draw a circle here. With a double bottom at 2031, a fairly weak low. The expectation again is chop, 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 rotate down, and start moving to 2026 is what I'm looking for. Let's have a look at the weekly profile just to round things out to make sure that you as a trader are looking at the big picture. So we are back in the range of where we were at the end of the year last year. We actually took out the 12/31 or the last trading day of the year's close and pushed through at the last trading day of the year. Closed down here in the 20, 24, 26 area. But what's important about the 26 is that it is a single print on last week's profile on a double distribution profile. So last week's profile had two distributions, one wide and one narrow, with a clear distinction between those two profiles at 2026. Also, 2026 created a gap way back in December, and it is where the market had closed. You can see that the last week of December skipped through, pushed through the gap, and started to work its way to the other side. And then when we reopened in January, we left this massive gap zone behind, which we've talked about quite a bit, the 2021 to 2000. And so overall, the expectation is the market is likely to revisit this 2026, and it's a critical area to watch. It is the primary target for Hypo 1 below us this morning for those reasons. Okay, so that's what I have for you. The looking back further, the 1-day chart, the daily composite chart. If we drag this out, you could see that we have cleared this 2015 area and are trading in this massive upper high volume node, and are likely heading to this key figure above. And overall, this 2064 is the highest volume node above 2015. As long as we stay above 2015.75, we're likely to tag the 2064 as a key area. If we push through that, the new all-time highs are on deck. We are basically back again, as I said before, we're basically back in the range of the end of last year, plus most trading last year occurred between 2000 and 2100, and we are somewhere near the middle of that range. So just keep the big picture in mind, especially if you're a swing trader, multi-day swing trader. You want to keep that in mind and keep an eye on the big milestones ahead. That's all I have for you. Good luck today, and I wish you well. Take care.